Hello and welcome. If you're an Australian retiree or helping a loved one navigate the pension system, you are in the right place. On March 20th, 2026, some major changes are rolling out for the age pension. The rates are going up, but the deeming rules are shifting too. In this video, I'm going to take you slide by slide through exactly what is changing, how it affects your payment, and most importantly, who wins and who needs to be careful. Let's jump into slide 1. So here is the headline: Age Pension Big Changes, March 2026. The effective date to mark on your calendar is the 20th of March. This is when the new rates hit your bank account. Now, a lot of videos will just tell you the good news, that payments are going up, and they are, but I'm going to show you the full picture, including the rule changes that might reduce that increase for some pensioners. Let's move to slide 2 and look at why this is happening. Slide 2 asks the question, why is this happening? There are two main reasons. First, indexation. The age pension is linked to the cost of living. As prices go up for groceries, electricity, and fuel, the pension goes up to keep pace. That's the March indexation. Second, and this is the big one, deeming rate review. Every now and then, the government looks at what banks are actually paying in interest. If bank rates have gone up, the deeming rates, which is the income Centrelink assumes you earn on your savings, can go up too. Both of these things happen on the same day, March 20th, 2026. Slide 3, Single Rate Increase Table. Okay, let's get into the numbers. Slide 3 shows the new rates for singles. If you're a single pensioner right now, before March 20th, you are getting $1,178.70 per fortnight. For March 20th, that's jumping up to $1,200.91. That's an increase of $22.21 per fortnight. Now, over a year, that's about $577 extra. That's a decent chunk of change for electricity bills or the weekly shop. But remember, this is the maximum rate. Not everyone gets this full amount, especially if you have assets, which we'll get to soon. Slide 4, Couple Rate Increase Table. Slide 4 is for the couples out there. If you are a couple combined, meaning what you both get added together, the old rate was $1,777 per fortnight. The new rate from March 20th is $1,810.44. That's an extra $33.44 per fortnight for the household. Again, that's about $870 extra coming into the house, but just like with singles, this is the maximum combined rate. Now let's look at the catch. Slide 5, Warning Sign, Deeming Rate Grid. This is slide 5, and I've put a warning sign here because this is where it gets tricky. The deeming rates are going up by 0.5%. Look at the grid here. For the first $64,200 of assets for a single, or $106,200 for a couple, the rate is going from 0.75% to 1.25%. For every dollar above those thresholds, the rate is jumping from 2.75% to 3.25%. So what does that mean? It means Centrelink is going to assume your savings and shares are earning more income than they did last month. And if they think you're earning more, your pension payment can go down. That's the trap I mentioned earlier. Slide 6, 2 columns, winners in green, check your assets in red. Slide 6 breaks it down simply, who wins and who needs to check their statement. In the green column, the winners are full-rate pensioners with no savings or assets. People with very low balances below those deeming thresholds. You guys will likely get the full $22 increase. Good for you. But in the red column, if you are a part-rate pensioner, if you have shares or if you have term deposits, especially if you're a single with over $64K in assets or a couple with over $106K, you need to check your statement. This change will affect you, and it might reduce your payment. Slide 8, Calculator Graphic, Real-World Example. Let's make this real with slide 7. Here is a real-world example. Meet Sarah. She's a single homeowner with $300,000 in financial assets. Because of the pension indexation, her payment goes up by $22.20. That's the good news. But because the Deeming rate went up, Centrelink assumes she earned an extra $750 in income. Under the income test, that reduces her pension by about $11 per fortnight. So, Sarah's net gain only $11.20 per fortnight. She's still ahead, but she only got half of the advertised raise. If you have more assets, the impact is even bigger. Slide 8, Checklist, Key Takeaways. Slide 8 is your action plan. Here's what you need to do right now. 1. Check your Deeming balance. That includes your superannuation if you're over pension age, your savings accounts, and any shares you own. Add it all up. 2. If you are over those thresholds we mentioned, $64K for singles, $106K for couples, be prepared for a smaller net increase. Don't panic when you see the letter. This is why. 3. Wait for your official letter from Services Australia in late March. It will show your new rate. And 4. If you're unsure, consider talking to a financial advisor. They can tell you if restructuring your assets could help.